Andrew, your take on the labor market headed into Jobs Friday. What's your call?
So we see a little bit below the consensus estimate, but pretty similar to the consensus number. It would be helpful from the Fed's point of view, clearly, to have something around 185 or whatever the Bloomberg consensus is, but nothing too different from the consensus.
Is there a risk, though, of if you have more people coming into the labor force, it means there's more slack, then the Fed does have to pull back? Does that scenario play out at all tomorrow?
I'm not sure you'll see this into the data tomorrow, but over time, it's a good thing if people are coming back to the labor market in the US, but clearly that raises some uncertainty about the amount of slack. But overall, the labor market has been, it's been pretty strong the last few years. Slightly slower pace of job growth is what we should be expecting now, given the unemployment is at quite a low level.
So that's the read into tomorrow. But yesterday, you were out with your 3 to 5 year outlook for Pimco, right? And you were saying there's a 70% chance of recession in the next 5 years. Can you outline where the risk will come and what your main thesis is in that?
Sure. Yeah. So you always have something around a 20% chance of recession risk. Given the last 50, 60 years, we've had a long expansion already in slow recovery after 2008. But looking at the next 3 to 5 years, we think you're going to have to take seriously recession risk over that period. A couple of reasons why it's worth highlighting. The first one is when you look at risk assets, you're not getting particularly generous spreads or valuation. And so one question is just whether we should be a bit more cautious in terms of our positioning, given recession risk over time and pretty tight valuations. The second thing is, in the event it does happen, you don't want to start from here in terms of the Federal Reserve or globally other central banks, the amount of room they have to ease. So again, in terms of the long-term horizon, the secular framework, a little bit of caution given recession risk and more limited scope for central banks to respond, we think is warranted.